In this video, traders, we're going to look at what should you do if you are in a trade and the price moves against you quickly. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so you're in a trade. And I'm going to assume this is a day trade, you're in a day trade, or you're in a swing trade and you happen to be at the screen. The point is you're at the screen and you want to do something. Price suddenly moves aggressively in your favor, and we're going to look at in your favor and against you. Now, I'm going to make the assumption that the price has moved against you and you've not been stopped out. Listen, in the perfect world, we've all got stops in where we should have, but mistakes happen. Maybe you've got a mental stop, maybe you just put the trade on, maybe you thought that your mental stop was so far away, whatever. The point is we need to take some action. So we'll look at that in a second, but first of all, let's look at if the price spikes for you in your direction. And I guess, we are looking from an intraday perspective, but we could also be looking for a swing trade perspective, but we're just extrapolating or extending, should I say, a time frame of actions that we're doing. The first of all is if the price moves in your direction, you pull up your stop, right? That's the first thing you need to do, because hey, I've been in a situation myself where I've been in a market, I've been trading nicely, it's suddenly spiked in my direction, massive profit, and I've dithered too much, and next thing is it's spiked back down, it's just been a fat finger, it's been nothing, and you've lost all that profit. So the first thing to do is get a stop and drag it up to halfway. Okay, so at least you're locking in some of those gains. It happens to be just a little blip and a little mistake and someone's mini fat finger or whatever it is, at least you've locked in some of the profit. Now, you don't want it so tight, because the point of this is, guys, if something new has come out, you are in a beautifully powerful position. You're in from the beginning of the move and you've got a lot of cushion ready to maximize the juice out of this trade. You're in it, you've watched it, you've seen it. This could be the trade of the week, the month, the quarter, whatever it may be. So first thing is, make sure you lock something in, drag up that stop. You don't want it coming up and coming straight back for you. But the next thing we need to do is, once we've protected some of those gains, like I say, not so tight that it's going to come out with a bit of noise, but halfway is about right. We want to get on the news and see what's going on. Get on social media, use the dollar sign in front of the stock or whatever it may be. You'll start to see something. If you see nothing, then you need to be a bit cautious and think, well, how much is this spike? And obviously this is going to be a big spike. We're not talking like a little tiny spike on a 1 minute chart. Something really hefty that's come out. Usually it's going to be on an individual stock, because if it's an index, it's going to be something that's pretty global and the whole things will start moving. Surprise news comes out, normally it will hit currencies, indices, gold or whatever. If you happen to be trading those, then obviously go to all the big kind of markets and see if they're all moving as well. If they are, there's obviously some news coming out. But if you're on an individual stock or something smaller, check the news, see if something's come out. Because listen, if something's come out, it could be a bid has come out, it could be a successful court case, it could be a contract win. They've just put out a news feed for it. So go and check the news and see if it's come out, anything's come out already. If it's positive news and it's solid news, you need to trade this. You need to not be urgent to take profits and say, hey, you know what, I've locked in something, let me trade this now from a fresh perspective. This thing looks bullish, this thing could run for multiple days, I am in a powerful position. Do I even want to build on the position, utilizing some of the profits I've made from the initial price spike as almost collateral for a larger position, if that makes sense? So I can pull my stop up. Yes, I've locked in half. How about if I use the profits I've locked in half to double up my position because I'm really early on this potential move? Don't you dismiss that, because in the day you want to maximize as much as possible. If that's a step too far, and I get it, then consider sticking with the trade. So hey, you know what, I'm going to start the trade. This thing could really start to rocket now. It's holding at these highs, it's flagging at highs. I've protected some of it. Let me just see now if I get another leg, another leg, another leg. If I get a good close on the day, and by the time this hits the news and all the media gets hold of it, maybe we're going to get another leg the next day. So I could be looking at a serious move here. So sticking with it, checking the news and reassessing the trade objectively. And that means assessing volume. If you're looking at it from an intraday perspective, you want to see, hey, how much volume has come in? Is it holding at highs? Just that price action assessment, and this is probably both in one, to be honest, watching price behavior. Does it hold at highs? Is there volume coming in? Does it do another leg quickly? Does it do another leg quickly? Is there urgency to it? If there is, you're in no rush to cover that long. You are in a good position. As long as you're protecting a full reversal, because listen, rumors come out, stuff comes out that really affects price and then swings it back again. So as long as you're locking in some, then you can ride this for as much as possible. If it's the real deal, you're in a great position. If it's not, you've given back half. I think that's a good kind of compromise to make. All right, so that's 4. Let's have a look at again. So we're going to assume here that you haven't got a stop loss in. You know, like I say, perfect scenario is you get stopped out, price spikes against you, get stopped out. Real world is often maybe you haven't got a stop, maybe it's a mental stop, maybe you've got a hedge position on, maybe you think you've got a basket of positions that are reasonably protected, whatever. So let's just assume you haven't been stopped out. The first thing that you must do to avoid the deer in headlights syndrome is to take some action. Just do something. Just do something. Don't sit there and look at it, because you'll sit there and look at it, it'll go down, it'll go down, it'll go down, and then all of a sudden panic will set in. You'll think, I'm losing lots of money, this thing's going bust, I'm in a stock that's just bankrupt, and you'll close it at the worst possible time. Just take some action as soon as you see it moving past your stop loss level. Also making the assumption that it's gone through what you assumed was a good stop loss position. If it's nowhere near your stop, then all you're doing is monitoring it and make sure your stop's in. But if it's gone through, you kind of, I made a bit of a mistake here. Take some action. Just trim the position. Or put in a stop, or close the position, just do something, right? Any of these 3 or something else, but taking action, putting a step forward, facing it, attacking the problem rather than just panicking about it means you'll get way better results from it. Listen, you're likely to have to take a loss. You may well bounce off, but what you don't want to do is have this in a complete catastrophe. So put in a stop. Markets move down, you're like, right, okay, where are we? Now let me protect myself against a further movement and put some sort of stop in so I know where I am. I've got my safety net in, bang, my safety net's in, it's under their position. If it goes another leg, I'm out, okay, I can forget about it. At least I can review and say, hey, maybe I want to get short in it, or maybe I want to get long, because you can review, but with more clarity, without being in a position. So that's one thing you can do. Let's put 1 here. Number 2 is trim the position. So first of all, you see it moving against you, just cut a quarter or cut half. You don't even think about it. You say, hey, listen, this has gone too far. Let me just cut it. All right, that's another thing you can do, taking some action. And the third thing you do, which probably is the best thing to do, but hey, I'm in the real world here, guys, and we can say, this is the best thing we should do. I know that we don't always act in our best interest in the heat of the moment, so I'm being realistic. The best thing you can do is just cut it. If it's gone through your stop loss, you cut the position. But I know that for many people, whatever reason, we get that deer in headlights syndrome. We don't want to do it. So I'm saying do some other things like trim it, so you still feel it might bounce back. Put in a stop, might bounce back. Listen, there's 2 scenarios. If the price goes against you, it's gone against you because it's a fat finger and it's nothing that's going to come straight back. Fine, you've got away with it. That stop will help you out with that. Or it's some catastrophic news that's the reverse of positive news and it's going to go for more and more and more. You must protect yourself from that. So maybe you could do this. You could say, listen, I've lost more than I wanted to. Let me put a stop in. Let me trim the position a bit and give myself a best of both worlds. If it carries on lower, I'm going to lose money and I'm going to feel bad. It's not going to kill me. If it pops back up, I'm going to lose what I've locked in there and I'll make that gain back and it's not going to be so bad. So adjust it to see how you see fit, but the most important thing is you don't let one trade damage you or kill you. And also, hey, you know what, perfect scenario is don't get into this position in the first place. Teach yourself to have the stop in place. Teach yourself to be alert as this kind of thing, or however you're managing risk. But a stop loss is the best way of doing it to manage against this kind of thing. But I recognize we don't always act in our best interests. But what we don't want to do is dig a massive hole for ourselves. So anyway, that's what you should do if you're in a trade and price moves sharply. Let me know your thoughts in the comment section below. I'll see you in the next one, guys. Take care. Keep the risk managed. Goodbye.